Welcome to Brewed in Monmouth, the real estate tea with Kate and Doreen. We're here to talk homes, hometown gems, and real conversations with the entrepreneurs and locals who keep Monmouth County buzzing. I'm Kate, and as always,
I'm Doreen. Each week, we're bringing you the voices behind the businesses, the stories behind the sales, and the tea you need to hear. So grab your favorite drink, and let's get into it.
welcome to another episode of Brewed in Monmouth. We're so excited to welcome Frank Forte of Lucerne Capital in Red Bank here with us today. Thanks for coming on, Frank.
Yeah, thank you so much for having me.
Frank.
Yeah, thank you.
So what's it looking like in the commercial real estate landscape for 2026?
I think it's looking pretty good. We're really excited. So the last couple of years have been, really slow, right? I know you guys are in residential and it's been really hot, right? Especially in Monmouth County. Commercial real estate's really heavily affected by interest rates, right? And it's also heavily affected by kind of larger macro trends. So when you look at commercial real estate in general, you have like a bunch of different asset classes, right? You have apartments, which, years ago we sold a lot of apartments. You have industrial, you have retail, you have office, and there's some other, niche-y things, right? Like self-storage, medical office, like these other kind of subsets. Obviously office, right? We all know kind of what's gone on there after COVID. It was really hard. A lot of people got, unfortunately, like really hurt. And there's some plays around the fringes, like people are converting, but really that's like a very small percentage of that. Like if you read the news, you'll believe, oh my God, like every office building everywhere is getting converted.
I think that was in the newspaper this morning. They were saying that so many, it's not as big as they said.
No, and like the projects that are happening are like, and the projects that are happening are bigger ones, right? Like 500 units, 1,000 units. They take an old office building in DC, right? Or like FIDI in the cities, like a really
That's exactly
popular,
what they were talking about, FIDI.
Right, or like Midtown, these like office cores, but and they're converting them, but it's really difficult, right? And if you think about like an office building is built in a very particular way, like so much different than a residential building, right? All the internals are in the core of the building. There's, it's set up for circulation. It's not really set up to be like that. And the cost of like, it's almost like if you've given these things for free, it still doesn't make sense, right? So anyway, office had a really hard time. It's coming back. It's like a flight to quality where people are choosing better quality office buildings. So if you're a big employer and you want your people back in the office, right? And we're here, like we're all on the peninsula or whatever, or close, and you see most of these people getting called back, people that are not entrepreneurs, they don't work locally, they don't have that same, benefit, thank God, right, that we do. And they're getting called 3 to 4 days a week, and they're all, complaining. That's the nice way to say it, right? I know this is people, keep it PG. But they're complaining, but, all of the landlords are saying, hey, how do we make it more enjoyable for people to come back, right? So you're seeing people go to better quality office space, so that's happening. But by and large, industrial, what we invest in, has held up pretty well. It's getting better. We have a whole bunch of deals in the pipeline for 2026, which is exciting. 2025 was slow. We sold some stuff. We bought, 1 or 2 things small, but it's kind of like a reset year. So we're really excited about 2026. The apartment space, around here, rents are still really high. You go down south, you go to Florida, you go Texas, Texas is like a disaster, right? You go to Arizona, and like they've just built so much. And the rents are obviously coming down, just supply and demand. If you're a renter, you have like the pick of, you want a golf simulator, you want, a freaking doggy daycare, pet washing station, you want a projector, you want a rooftop volleyball court, like you name it. It's like,
it's crazy what some of these buildings offer.
It's nuts. Like they used to call it the amenities.
Not just the gym.
Right. They used to call it like the amenities armories because it was like who could do like the most ridiculous amenities, like who could offer them. The apartment space obviously has its challenges, but by and large, I think people are getting really excited about the upcoming year, which is like not really a theme that's been around for a while. It was. I started our business in 2016, and we had like an unbelievable run from 2016 to COVID, and it's kind of one of those things like just about the time you feel like it can't, like it's never going to end, right? It ends, and then similarly when like times are tough or not as great, you feel like it never goes away, right? But this is real estate. This is the
roller coaster.
Yeah, and this is the world we live in. And I'm thankful.
So are you seeing amenities like that in apartment buildings in New York now for offices, or?
No. Like you're just like any of these people that have built these new apartment buildings, right? They all knew so oversupplied. So they're like, all right, like what crazy thing can we do next to like incent people to leave? And it's just like a game of musical chairs, right? Like I'm a developer, I build, I can't lease it up. So I'm like, I'm going to go take all the tenants from the building next door and I'm going to offer them 3 months free of rent. And I'm going to all these crazy amenities. They go there, they get the deal. And then the next guy comes out of the ground next year, he can't lease it up. So he's like, oh, I'm going to give him, and it's just like the same people cycling. And it's like Austin, rents are down 21%.
Yeah,
Austin,
I saw that.
Right?
I saw that.
Even Charlotte, where we've done a lot of business forever, it's got like a insane growth pattern, right? Like when we first started investing there, it was 43 people a day were moving to Charlotte. That was the stat. And this was 2016. Now it's 147.
Still?
It's 3x or more in a decade. It's
And
wild.
they have lots of land down there, right?
Yeah, it's getting harder and harder. Like all these cities that were ultra pro development. Look, it's like, I'll take a step back. It's not a politics thing, but it is about like local government, right? And there's areas that are much more development friendly than New Jersey, New York, Connecticut,
For sure.
Maryland, so on and so forth.
California.
The good news, though, is when you buy assets there that have upside, right? We don't develop a lot. We buy stuff that needs improvement, that's dislocated. You have a really good barrier to entry, really good protection when you buy something, because it's California. Like I was talking to someone the other day, it takes on average 15 to 17 years to get a building permit in Malibu.
That's
15
insane.
to 17 years. And this is a person whose family's been in Malibu forever. They're well off. They know what, they're not, this is not like some random person. This is a person who's dyed in the wool, wealthy California family that has that, has means and access to do whatever they want, right? So you see all this stuff, and with the apartments, there really was no like moat, so to speak. There was no protection in the Southeast. There was so much land. Everyone was development friendly, and basically these are all stick-built things, so they can go up as quick as you can build them. And these people bought all this land, quickly developed it. They thought the COVID like population surge would never end, and it's petered off. But more importantly now, like the cities have woken up and be like, oh my God, like all this development happened. It wasn't like thoughtful. So now they're all grappling with like, infrastructure challenges, right? Look at Miami, the traffic.
Too much of a good thing.
Too much of a good thing. Miami, Charlotte's starting to grapple with it a little bit, but now they've all become a little bit more, they're still like wide open compared to up here, right? But they've all become like a little bit more thoughtful. Like, okay, now we're going to start asking for some, we're not going to require it, they're not there yet, but we're going to start to ask for some affordable housing units. Hey, please, we would much rather your project have 20% and we'll give you more density if you, it's like they're beginning to go the path of up here. So they're still probably 20, 25 years ahead of here, like in terms of being able to be a great investment opportunity. But eventually, all good things will peter out, right? Like they're starting to put toll roads in North Carolina. For years, there wasn't any. Like up until a few years ago, you could drive, the roads were beautiful. No tolls, no nothing. Right now, you pay a toll if you want to go on a fast pass lane, right? Because they're grappling with density and congestion. So how do you fix it? You offer a little proffer. If you want to pay $1, you can go on 77 North, and while all the other suckers, wait in the slow lane, you can go. So it's kind of interesting to see what's happened. But yeah, it's really fascinating. I mean, listen, I think this year is going to be great. Liquidity is opening up. People that were on the sidelines for a long time, so much pent up capital, right? Just like us, right? So what do we do just to just put it in perspective, right? So we go in the simplest way. We raise money from investors, right? Some of our own money, some of it's ours, some of it's family office money, some of it's just high net worth individuals, doctor, lawyer, dentist, small business owner. A vast majority of our investors are in Monmouth County because we've kind of grown it homegrown. So since 2016, my partner and I, so my partner raises our capital, I run the rest of our operations. We've raised about $100 million of investor equity. Our average check size over that time is like just under $250,000. So it's kind of your average, wealthy person. We all know them, right? Where, in Monmouth County, we have the great fortune of all, it's a very affluent place to live. It's a nice place. We're very lucky. We're in a bubble here, right? It's not, most of the country is not like this. A lot of New Jersey isn't, right? So we've grown our investor base organically. We raise money for deals, we buy deals. It's usually a 3 to 5 year hold cycle. So we've done about 400 million of volume like that, of deal volume, not including what we own now. And volume is what we consider in and then out. So we go and we raise money, we improve an asset. It could be CapEx, so it's like capital starved, right? Someone's owned it for a long time, they just let it go to crap, right? And it needs a new roof, or it needs a paint job. It needs the tenant's units are beat up, so you can't get the right rent because the landlord is unwilling to invest.
And it maintains.
Right, so you can create a really nice product. And even though what we do is industrial product, right, it's multi-tenant industrial. So actually this, where we are now is like a perfect example of it, where this is being filmed. It's like most of what we buy is like this. They're business parks. Okay. So you go in and could be 3, 5, 10, 20. We've had ones where it's 40 businesses in there, and they're all in small suites. Maybe they have a little roll-up door on the back if they accept deliveries. They have a little office space, right? Not, too different from this. And it is incredibly universal tenant. So at this point, we have about 120 tenants. We manage all of the stuff ourselves, and they are every business you could possibly imagine, from like trades guys, HVAC, electrical, plumbing, to I had a guy for years that he made the machine that would compress like these mattresses for Casper. Like, when the mattresses come, he made like the machine to do this. I have a guy that just sells children's socks. Like I have landscaping guys. I have guys that do wrought iron. Anything you can think of. We had a guy for a while that made these really thin silicone mats to protect your stove. During COVID, his kids were throwing pancake batter all over his stove. And he had like invented a QVC product, did really well. So he's like, I want to invent the next product. He goes out, he gets some patent, and he makes 9,000 SKUs for every stove you can think of in America. You go on, it's laser cut. It's like a WeatherTech basically for your stove.
Oh, wow.
This guy was one of my tenants. Like the most bizarro things, but they all need space just like this, and they can generate a lot of value. It's really universal. It's about functionality. So in that sort of stuff, there's a lot of demand.
How do you scale that? Like, do you have boots on the ground till if something breaks or something like that?
Yeah, it's a great question. So what's really cool about the industrial leases, so you talk about lease types, right? You guys are well educated. For the people who aren't, there's like a gross lease and then there's a net lease, right? A net lease, the tenant pays for everything. A gross lease, you pay for everything. So an apartment lease is a great example of a gross lease. Your expenses go up 20%. Well, unless you can raise the rent on the tenant 20%, you just lost your margin, right? With a net lease, most industrial product, office product, retail, it's all structured as a net lease. So they pay a base rent and then they pay a common area charge, the nets, you call it, on top. It includes his tax, insurance, maintenance, all this stuff. So we have folks that will go and will fix, whatever's wrong. They call and they say, oh, my, whatever broke. We have a whole slew of vendors and we manage it from New Jersey. In North Carolina, specifically, we have an asset manager who's great. She's been with us for a number of years, and she kind of covers that whole area and helps run our capital projects down there. The rest of the assets we manage here from New Jersey, and we're always traveling and seeing them, but these are businesses, right? They're not, it's much different than like a residential tenant who's ultra needy. These are business people. They need to just get whatever they need to get done and move on because they're operating a business and it's a detriment to whatever they're doing. A lot of them will just fix stuff themselves. A lot of them are trades guys, right? So they can even do it cheaper. So it's not hands off, but it's like the boots on the ground aspect of it. It's important to go regularly. We have cameras set up and everything so we can monitor site conditions, but it's a business place. It's not like an apartment building where people are throwing trash in the hallways or you have degenerate tenants kicking in the walls. Like this is their business, it's their livelihood.
Is that kind of why you moved out of the apartment space?
It is, yeah. Post-COVID, it became like extraordinarily difficult to operate apartments, which is really sad because we did it for years. We did it really well. And then before that, I was a banker. I did all this PE stuff, and it was all around apartments. So it was my whole, before apartments became like the soup du jour, it was our, it was an 85%. I did $2 billion of finance. Like we knew all the stuff at the back of our hand. So it was really a hard thing to kind of just like rip that Band-Aid off and leave it behind. But I knew if we continued to go down that path, one, the space wasn't coming back, and we exited it we still have one apartment deal, but for the most part, we exited about 3 years ago. And back then, people thought, survive till 25 was like the mantra, like, oh, everything's going to be good in 2025. Now it's like, you talk to people and they're like 2027, maybe 2028, it comes back because there's so much supply. So I'm so glad we did because we would have been sitting around doing nothing. Candidly, may have been out of business, right? I might have just said, hey, it doesn't really make sense for us to do this. I'll take the money I've made personally. I'll go and I'll just figure out, I'll do something else, whether it's real estate or I'll just totally do something new. So I'm glad we got away from it and we've had a lot of success in the industrial. But yes, that's part of the reason I got away. The tenants are unruly. All the laws in America, like I don't care. They are. And it was really sad during COVID, right? So many of these tenants, we used to own a lot of low income stuff and we would always pride ourselves on what we called safe, clean, and dignified housing, right? So we were not slumlords, and we always laugh, right? You naturally laugh when you own low income stuff because it's like this, you picture like, what is it, Danny DeVito in like the Super, and like these funny things, right? But the truth is we operated like a really good business in clean housing. But, when a tenant's paying $1,200 a month, it is a certain clientele of people. And, there's a certain way that they learn to behave over time, and they they don't pay, so they put their head in the sand. They don't communicate with you. They disappear. Then you pull back the onion. They have child support and credit cards and all this stuff, and it's really sad. And it just became a thing where, one, I didn't want to be the dealer like of that justice anymore, right? Because we would evict more people than you could ever imagine. You think Sobel's evicted a lot of people, more people than you can. And I say this as, he was my my blunt object for a while to evict people. We owned in New Jersey years ago. We don't anymore, obviously. But anyway, I didn't want to be the dealer of that justice anymore. It's a brutal business. And then on top of it, the courts and all the other stuff that's designed to give you those tools, right? That teeth to go and enforce. At the end of the day, it's a business. This is America, right? You own something. You have rights to it. This is what separates us from the rest of the world. And it's gotten to the point where a lot of these cities, it doesn't even matter where you are, honestly. Like, you could be in the reddest state or the bluest state. They've gotten so difficult where if you're a landlord, apartments had such a good run that they say, hey, well, these guys have all made so much money, so you know what? We're going to give the tenant an extra chance and an extra chance. And before you know it, 6 months goes by, and these people owe you, $15,000 on like a $1,200 lease because there's all these other charges that build up. Then on the way out, when they finally leave, way out, the final, we won't say it here to you, is like, I'm going to kick in your walls, I'm going to turn on all your water. Oh, and, wow. It's just a disaster. So wow, we're really happy we're not in that space anymore, as you could tell. But
and you don't experience that on the industrial side?
No.
But you experience that universally. It's not just in New Jersey?
Yeah. Oh, no, not just New Jersey. I mean, New Jersey's worst of the worst, right? So Texas, it used to be, and they tried to pass a lot of changes. I don't know if they ever did, but Texas, it used to be, if you didn't pay your rent and it went so far, the landlord could actually take the door off your unit. Wow. So Texas and other states also used to do body attachment. If you don't pay and the debt goes far enough, they could attach the debt to your body, and then if you get pulled over, they put you in prison. Like
debtor's jail?
Yeah, like modern day debtor's prison, exactly. Wow. And like a lot of these things have gone away. I don't know if they're still doing it or not, but it used to be, you used to have teeth to enforce these things. And I'm not saying that's the right thing to do, pick up some guy who owes, $50 late fee, toss him in jail. But
you should pay your bills. Yeah. And you should respect the house that the walls that you're living around.
That's right. And I think it just becomes difficult. So industrial, for comparison's sake, 3 or 4 years, we've actually only evicted one tenant.
Oh, wow.
And it was a moving company. The guy couldn't pay. And then we had about a $40,000 judgment on him because his rent was expensive. But we had a personal guarantee, right? And for those who don't know what a personal guarantee is, it opens you up to, paying a debt beyond, an LLC, right? So when you're a business person, you use an LLC because it's a limited liability company. It shields you. Most countries in the world, by the way, don't have this. Like, there's countries where to this day still, and these are developed places. These are not like, third world or as I affectionately like to call them, 2.5 world countries. These are real, like, modern economies where if you don't pay and you pass away, your wife's responsible or your children or whatever. America is set up to, foster business. So we have these things called limited liability companies. Well, if you sign a personal guarantee, that obligates you to that debt. And on small business, they are required, because most of them don't have credit. They're small. They haven't been in business a while. So they say, hey, I'm going to sign my name on the line and I'm going to obligate myself to this debt because I believe in myself, right? And you have that option in America. And it is required for most of these small tenants. So that is what gives you the teeth to then go enforce that. Now, obviously, could it be a situation where the person has nothing, right? It's blood from a stone. You're not getting anything. And the best, like, offense for that is defense, is screening them properly from the get-go, right? So we review tax returns, we review bank statements, we credit reports. Have they committed any crimes? Do they owe alimony? Even though it's not our business, it is our business because I want to know what type of person this is, right? It's character, a lot of it.
What kind of recovery costs do you have to pass that along?
It's high. Like, there's a tenant right now who they had a partnership dispute, their mechanic, and the guy's kind of a disaster, and he'll end up paying. He is. I mean, like, it's funny. Like, once you learn business, I'm sure you guys know it too. Like, you could tell, you sense people. You could see when you go in and you look at a tenant, and all their stuff's in place, and it's all nice, and they pick up the phone. Hello, it's Frank's Automotive, whatever. How can I help you? How can I make you smile today? But you could tell from like two guys in a room with like a set of tools where they're like, oh, dude, where's the wrench? And like there's stuff's everywhere. There's like cobwebs hanging from the ceiling. So we inherited a tenant like this, and the guy's a disaster. We've tried to work with him, and we actually went to court today to get a writ to put on his door to tell him basically we're going to evict him if he doesn't get out. And anyway, the long and the short of it is the recovery cost is probably somewhere, we're up to about $5,000 or $6,000 in legal bills, but his rent is like $3,000 a month, and we have security and this other stuff. So like net today, if we lost him today, we would be in the hole about $5,000, which all things considered is not terrible. And when you underwrite these deals, you always underwrite for a little bit of credit loss because you expect it to happen. You hope it doesn't.
Right. But just in case.
But I'm going to go pursue this guy personally, right? I have a personal guarantee. I know where he lives. I'm going to go file an action with the court, and we'll pursue him. And
I don't just keep picturing it as a real. I'm going to find this guy.
Yeah.
I'm going to pursue him.
We are. I'm going to find him, and mark my words,
Hunt you down.
He will pay, because they all do, because otherwise I told him, I'm like, hey man, like, no offense, but I'll come after your 401k. I'm going to come after your house. I'm going to come after all of your savings. Like, you made an obligation you need to pay, and you've, screwed around for the last few months, and we have to come here and have to waste our time. Like, you made an obligation. Now it's time to pay. And this is the same guy who 2 months ago called me. He's like, oh, can I get a renewal? Like, dude, a renewal? Like, are you like, where are you on the same planet that I'm, It's like, no, it's going to be fine. Like, no, it's not going to be fine. Your rent isn't that expensive. And by the way, your rent's under market anyway. So we're going to move you up. It's very frustrating. But then there's like other success stories, right? Like
for sure.
We have these other tenants we brought in recently, and amazing success story, right? So they're two immigrants, right? And one of them's an African guy. He came from like Senegal, and the other guy's from, actually, I don't know where he's from. He's somewhere in the Middle East, and they came here. They settled in Maryland, whatever. And they what's it called? They are in this automotive business, and they were doing this business out of their driveway. Okay, they were doing, I don't know, maybe $20,000-$30,000 a month out of their driveway, right? And you review their bank statements, and it's hilarious because you see like intermittent charge in there for like Wendy's and like Uber. They're running everything through it, right? They're just like scrappy. They're trying to figure it out. Now they're absolutely murdering, and we gave them a shot, okay? And the rent was not cheap. It's like $10,000 a month. It's no joke. And we gave them a shot, and they're now doing almost $80,000 a month of revenue in 6 months. And they have this amazing Instagram following. They have like all of this like, it's like a new age business, right? Like, you contrast that with these guys that are in the thing, doing whatever the hell they're doing, drinking Guinness during the day. Like, all these guys love to drink on the job. It's hilarious. Don't ever get your car fixed, not the dealer. But they're doing that. And then there's these other guys who are like super clean. Everything's in place. Like, they have a killer Instagram following. Like, they've cultivated this whole like following around their business. They created like this like catchphrase for like when you go do work with them. So they'll like post stuff, and they'll say like, do this, and they'll post the things and like all this cool music, and it's like a new, and these kids are like 20, and they're 21, 22. They're killing it. Like, so that is what makes me happy to do this.
We're very local here in our podcast, and
right.
You're clearly like all over and not in New Jersey anymore. What is the biggest headwind for doing business in New Jersey, you think?
New Jersey itself?
The regulations?
Yeah. All jokes aside.
Just because the cost of doing business is very important, especially when you're looking at your bottom line. You're talking about, taking someone to court over $5,000 if your margins are thin.
Yeah, well, and so just to clarify, like, that's less about the margin being thin and more about setting the example, right? Like, it's the old, like, kind of like, and it's like a joke I make. It's probably not the funniest joke, but it's like, when people say, like, when you go to prison, you either like beat someone up or you get beat up. Mm-hmm. Like, when you go and you take over a property, you need to like draw the bright line in the sand very quickly and be like, we're not messing around. There's no payment plans. There's no nonsense. Like, you owe the rent, you're going to pay. And if you don't, that's fine. We'll figure out a way to get you out, and, we'll put someone else in.
You have to set the standard.
Yeah.
Correct. And that's what we do. And that's why it's important to me to collect every dollar. And our investors appreciate that too. And this is why we generate outsized yields. It's not from being like, Scrooge or, Frank and Easer, right? It's from being, diligent, and this is our building and we control it, and we have debt, right? And some of this debt I sign personally on, right? Like we were talking about personal guarantees. A lot of this debt is personal past a certain point. So a deal goes bad, it's a $5 or $10 million debt that I'm attached to. So that's these
you
are
have
the
to
things,
protect yourself,
right? And these are the things that also, these are like the constructs of business that force people to do the right things.
Right.
So yes, New Jersey is a disaster generally to do business in. I think if I didn't operate a real estate business where taxation is very favorable, I don't know how you operate an operating business in New Jersey and be okay where if you're really successful, you're giving away an extraordinary amount of your income. And then on top of it, there's all this other regulation and crap and filing fees and this and that. And it's suffocating. And by the way, the rents in New Jersey are really high. Like we own a building in New Jersey that we built in Howell. It's an industrial building. It's beautiful. And it stays completely full because New Jersey, and part of the reason it became such a home run is we bought the land from a guy. He was sick. He actually lost his legs to diabetes, which is like a crazy, he's dead now, but crazy story. And we thought it was too good to be true because the pricing was ridiculous. And it was during COVID. We all went in. Everyone had these crazy masks on. This guy sitting there with no legs, cheaping Marbreads. And he's going to me. He's like, I like this guy. He looks me in the eye when he talks to me. And me and him struck a deal. We're the only ones without masks. Everyone else had like these big, like the duck masks. Remember when people were wearing like the weird duck masks?
Yeah.
We struck a deal and we bought this land from him at a really good price because we connected and had half the site worked on and all this other stuff. And while we were in the development process, Howell had passed this sweeping moratorium on industrial development. And the type of development that this was, it is nothing to do with like the million square foot,
warehouses.
500,000 square, right? The bombers, like that's in industry, they call it like a bomber, right? Like it's like this massive just plop, right? Like a Prologis, is a Sieges, Exeter, EQT, whoever builds these things. Because Carlisle and another group had done a JV further down 195, closer to where it meets the turnpike down that way. And they were like, we don't want any more of this. And so they basically stopped all industrial development. Now, who are my tenants? They're landscaping people. They're guys selling stuff on eBay. One guy's a guy that sells these beautiful classic cars, like he'll source a special car for you. These are people with local businesses that need a place to work.
They need a place to go. They can't be traveling
Correct.
20, 30 miles.
So all that stuff got outlawed. Our rents went to the moon, 40% above where we thought. And it turned a project that was supposed to be a home run into like a project that, like a once every 5 year, the fog of war, you can't see it, you don't know, you think it's going to be good, and it becomes like unbelievable. So we have that deal over there, and our rents are $16 a foot, triple net. To put it in perspective, this is what we get down in Charlotte, in a core American city, one of the fastest growing cities in America. This is what I get in the core city. We're out here in Howell, getting 16 a foot, and the nets, right, are over $4 a foot there. In North Carolina, they're half of that. And why? It's because $2 out of that $4 is my freaking property taxes in Howell. They're outrageously expensive, and they keep going up. And the tenants are like, why are we getting crushed? They're like, we all live in New Jersey. We're sharing in it with you. We're not, there's no, we don't make money off the pass-throughs. That's just, so it's very interesting. And when you look at that cost of doing business, it's, imagine being nowhere, you're close to highways in Howell, but like, you're not in a city core. You're not. Yeah. You're in freaking southern Monmouth County border. It's mind blowing.
So let's pivot to some good things about Monmouth County because we're stuck to a half hour here. So what's your favorite part about living in Monmouth County?
My favorite part is we live pretty close to the beach, all of us, right? Collectively, it doesn't kind of matter where you are in Monmouth County unless you're super west. Like we're all within striking distance of the beach. I think the food scene is amazing, and we get, I think you get a lot for what you pay for. The property tax is below, right? Like they're awful. There's no two ways about it. But at least specifically where I live, I think the town does an amazing job. I like that it's a small town where I live. I'm actively involved in the community, which is nice. I like putting my fingerprints on that. I like having neighbors close by. I like that I can walk everywhere. And then I like if we ever need to go to New York City, I'm not far away. Right. Red Bank's beautiful, right? That's where our business is. It's amazing when we entertain people. Investors come. Yeah. People who own businesses come because then we can walk downtown. And by the way, in the summer, like it is really difficult to beat where we live in the summer.
I agree with you.
April and May turns around and it's like the world comes like roaring back to life. Everyone's super happy.
We're just saying that I hibernate, as you know.
Yeah.
I hibernate in the winter, but April comes around, watch out.
Everyone's driving like they're super ironic. Like, oh, dude, I have like my 79 Bronco. There's like a ton of those that pop out. So I'm not at that point in my life yet, but
don't ever be.
Yeah, that's Kate knows that's not my style. So it's funny. This is like a total sidebar, but Kate knows me well, and we just took my daughter to Disney for the first time, and hopefully, fingers crossed, the last.
Never.
And,
How old is she?
She's 7. She just turned 7, so we gave it to her on Christmas Day, and then we were like, we're leaving tomorrow. So we went for 4 or 5 days,
fun.
and it was like a radical
Departure.
culture shock and like juxtaposition from like I almost felt like I was seeing other people in the crowd that were other normal people giving me like the head nod, like, I see you, man, like, keep the fight up. Like, we're all like in the sea of like people running me over with scooters, right? Like it was another world. But like by the way, it made the point of it was like it made me really appreciate where we live, because we're cultured, we are lucky to live in the shadow, irrespective of what's going on in New York City right now. Like, it is still the greatest city in the world. We live in the shadow of it. We have access to everything. We essentially want for nothing, right? We have anything at our disposal in Monmouth County. We're really lucky. And again, like, I travel all over. Like, I see all these different areas, and you always think, oh, what happened if I lived here or there? But like, it's pretty hard to beat where we live. Like, we're really fortunate.
Some of these great cities like Charlotte, you go to the restaurants and, you're just like, wow, it's just not the same. Like, you just can't get that good Italian, that good pizza. It's very
you cannot.
Franchise-based.
You cannot. So I'll tell you this. Charlotte, when I first started going there, you would eat at this place called Red Rooster, which was like vile, right? Like, you wanted to puke. And they're like, how do you want like the summer or the winter succotash? I'm like, I want neither. I just like, give me something normal. Yeah. And Kate knows me. I don't eat salads. I'm like, can I like give me just like a salad? Like, I need something that's not like cooked in 10 gallons of peanut oil or whatever the hell you guys are using. And the restaurant scene has improved a lot. And if this puts it into perspective, 2 years ago, Charlotte got their first tasting menu ever. Right? New York City's been doing this for like 20 years, 25 years. And Charlotte just got one Michelin star this year, first time ever, which is like a very cool validation of like that part of the country that it's like coming up. Yeah. But you're seeing like a lot of cool chefs that were like, oh, we were in Brooklyn forever. Like, Brooklyn's become like, Brooklyn sold out. So now I'm going to Nashville or Charlotte or Charleston or Savannah's super cool. Yeah. But it's not New Jersey.
What do you think? This is the last question we're going to ask you. What do you think the Netflix deal is going to do for around here? I think everyone's making their predictions.
I think it's going to be, not to use like a Trump word or whatever, because tremendous is so overused these days. But like, I think it's really going to be tremendous, because look, they passed the tax credit thing. New Jersey desperately needs jobs and revenue, right? Murphy, on the way out passed this huge spending bill, $128 million. I don't know if you guys saw this in the middle of the night the other night. Like, we have a $4 billion deficit. And listen, politicians are going to do what they're going to do. We're all in a, country's in a deficit. But like, anything New Jersey can get, and there's so little things that like are left to be unlocked. And you look
differentiators.
And you just look at Fort Monmouth. It's, 1,000 acres or whatever, that for years was like, New Jersey's the densest state in America. Like, it's like a gift from God that was given to us to go unlock that value. Like, it's a one-time shot, right? It's like a one-time like silver bullet to use, and I think hopefully it creates a lot of jobs, create a lot of high-paying jobs. It's gonna make this real estate market nuts.
I don't know what the downsides would be. I think
the downside is like, depending on how they structure these tax incentives, and it's above my pay grade in terms of like, I haven't spent the time and, quite frankly, the willingness to like look into it, But if they like, I hope they figure out a way to either get them entrenched enough where eventually they get like significant tax revenue, or the deal doesn't go into perpetuity. Like, there's a way to really monetize it other than just bringing more high-paying jobs. Like, we live in a sea of high-paying. All of us have, good job. Like, you have to be of a certain level to live where we live, unfortunately. So more of that is just going to push the housing market up. I think here's a little very just specific prediction. I think you see Fairhaven, Little Silver, some of these other pockets where there's just not a lot. I think in the next 3 or 4 years, the baseline becomes almost $1,000 a foot for residential. I think that's going to happen.
Getting close to it, right?
And yeah, like you're pushing up, like, you would know better the exact stats, but like I feel like you're pushing up into like the 8s.
We're like 9s. At 6. Well, that's for something perfect. We're like at 689 in Fairhaven right now.
I think Rumson, it becomes really difficult to get there unless you're like true waterfront or something special, and that's just because the scale of the homes there is higher, and notionally there just becomes a price point. But listen, we live in Fairhaven. Like, it also scares me with Fairhaven. I think at some point, does someone really want to pay $3 million for a 3,000 square foot house? Or do they just say, well, if I can afford 3, I can likely afford 4. I'm just going to go down the road. Like, I think it's becoming...
At some point, it has to.
It's becoming an arb where, Rumson is theoretically the better address, right? If you care about that sort of thing, it is. But generally, beyond that, you just get a lot more. It's actually more of a value play, as deranged as it seems. It's a better value play than Fairhaven by a mile, right? You get a bigger house, you get more lot, and theoretically a better address. So I don't know, but it's going to be really interesting, I think.
It is. Well, thanks for coming on.
Yeah, no, thank you so much for having me. It was like a thought stream, a bunch of different topics. So hopefully,
yeah, but it's really interesting, and I think it gets people thinking.
Yeah.
About things that they might not have, woke up and thought about today, investing in commercial real estate, and just how everything's changing all over not just our county, but the country.
Yeah. Listen, I think in like a world of AI and all this crazy other stuff, that's in a world that's like very fast changing, very digital, very AI and non-human. Like I think in a lot of ways AI is going to re-dignify being a human, because it's going to you're going to have to go to work, right? Irrespective of what you do, you're an entrepreneur, you work for somebody, you have a W-2 job, you're going to have to prove that you should be there. You have to create real value. So hopefully productivity goes up for people that are in the know. But then in real estate, like, sorry, AI is not gonna take my commercial building and go and do all the work and go and deal with these tenants and do all this nonsense and all this extra stuff, this secret sauce that people talk about that isn't really secret. It's just a lot of hard work. Like AI can't do that, right? It can't take real estate.
But it also comes down to like what you said with the man with no legs, right?
Right.
It was
what an incredible way to put it.
You connected, right?
Yeah, sure.
You had
human interaction,
interaction,
100%.
and that sealed the deal for you.
Yeah.
AI can't do that.
No,
it can't. And sometimes that's with selling houses too.
I was on for literally 4 hours today trying to get it to do an invitation the right way, and I was like, I just had to do it. I was doing other things, but I'd be like, no, you didn't do it right. Do it again. Do it. So you argue with it. It's crazy.
As if it's
Yeah. No, but listen, I don't want to. I could sit here and probably talk for like another 4 hours. Just keep.
But thanks for coming on, Frank.
Thank you guys so much for having me. It's been a pleasure.
Great to see you.
Appreciate
Thank you so
it.
much.
Thanks.